Well, hello, fellow investors and traders. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time, asking ourselves what happened today, what does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel LA Little. I don't have my regular mic with me today, so the quality of the sound, you might have to turn it up a little bit to hear me. Hopefully we'll get that solved tomorrow and get things back to normal. As far as what happened to these markets today, let's take a look at it. As you know, the Fed comes out and raises rates first time in almost 10 years, almost a decade. And the markets fully anticipated that and thought it was a good thing, up 1.5%, pretty much across the board on the indexes. You had some small rises over in Europe, some nice big gains in Asia. Oil gets hammered again on inventory concerns. Bonds also sell off slightly. But actually, if I look at more of those bond type trades, a lot of those trades actually picked up support and look like they're going to try to actually work higher, not lower. Gold, silver also got a pretty good bump. I wasn't quite sure I understood why that was the case. Dollar was flat. If we turn to the markets and see what they want to show us, I was off last night, but while I was traveling, uh, we had a nice big push up yesterday again, and then follow through today on the Fed. And the Fed news essentially was quarter percent bump. They bumped up. I saw Wells Fargo bumped up their prime rate immediately afterwards. So we go into a quarter percent finally, after a decade. But it's really not so much the rate hike that meant anything today. Everybody already knew it was going to happen. It was well priced in at this point. The real question is, when would the next hikes be? How is that going to play out? And the other question nobody's really talking about very much at all is the balance sheet. How are they going to deal with the balance sheet? Right? I mean, they got $4 trillion worth of debt on the balance sheet. How are they going to, whittle that down? So far, they continue to reinvest all those um, assets in new paper as they come to maturity. And when they stop doing that, then you're going to see other things start to happen. So right now, doesn't seem to be an issue. You get follow through. So remember, we had the hammer reversal, follow through. Now you're back above it. And if you actually do the neoclassical here, you got above the ABCD structure, right? So that says that, yeah, we're not going down. This thing was trying to go down. It's back saying, hey, it's more of a sideways thing. And if we say it's a sideways thing, well, where is the sideways? And if you're looking at it here on the daily, right, the sideways on the daily is this area here. If I can get it to draw, just a second. Yeah, right about there. So back in the upper half, you're going to go after the highs. You have two swing point highs hanging up there at the highs. And that's really where the breakdown bar is on the monthly, right? I mean, on the weekly. So, this is that breakdown bar. If one can get over the breakdown bar, then they could push higher. And that really is the only thing keeping this thing from testing the highs and probably making new highs. So taking a look at some of these other charts, you got the same sort of picture. Here's the NASDAQ. NASDAQ also going up. Pressing back up, looks like it's going to go back and try to test the highs before it's done. Now the NDX has been the one that's lagging. Apple in particular has been struggling, but even the NDX is heading back up towards the highs. The real laggard as far as an index has been the Russell. All of these, as you saw today, picked up more volume. And so volume's picking up as price is. And the Russell gets over that little breakdown bar at the end. But what the Russell has to do now, of course, is get over these bearish retest regenerates. Remember, it broke several of these on the way down. And so that's going to be the test here. We may see a little pullback tomorrow as a result of that as it comes into this. If it just gets over it, right, then that's really a nice, strong picture. Speaking of getting over it, if you look over in the world markets, in particular, if you look at Europe, Europe itself has a little bit of, shall we say, resistance popping up here. And that is as it came into the swing point low, the price was 1080, 10.811. You got to 10, excuse me, it's 10.572 is where you got to. That low was actually 10.607. So you almost got into it, missed it by about 20, 25, 30 points. And it ended up doing a doji. Now, the doji doesn't mean that it has to fail. As a matter of fact, with the strong market today in the U.S., we may see some follow through tomorrow, but that's where it's going to test to, and that's where it's going to find its difficulty to continue higher. It's off this bearish retest regenerate. And remember, that's coming into this big bar down. So I suspect, as I said before, you're going to try to get into that price point, which is about 780 or another 350 points higher. And then that's where it's probably going to have its biggest difficulty once it gets there. So potentially more room to run there. Asia, certainly more room to run. US looking pretty strong. And, when we come back here, we'll take a viewer question or two and then kind of wrap it up looking at some of the sectors and the ox markets. I'll be right back.
Learn how to trade with the Trade with LA service provided to you by TA today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, as we come back from the break here, there was some viewer questions. I want to tackle those first. One had to do with a hammer reversal. What is that? And essentially, a hammer reversal is where price goes up underneath the prior bar, reverses, and you get what looks like a little hammer that forms. They call that a hammer reversal. Typically what you'd like to see is lighter volume on the hammer than the bar prior to it. Doesn't always happen. It doesn't always have to come back immediately and test it. In this case, it certainly didn't. We just pushed higher. So that's a hammer reversal. The other question had to do with how to view some of these high volume reversals that took place on that same day. For example, if we look at XLI, you can see again another hammer reversal, right? Gets up underneath, back over, volume expands. Again, you prefer to see lighter volume, not heavier volume, because that invites a retest of that low. But if you do pull away, like we actually ended up doing here, then it doesn't matter. But there's if you have an under back over lighter volume, and in this case if it's a hammer reversal, that gives you a fairly good indication that you are simply going to move higher. If it has heavier volume though, that next bar, as you can see here, really kind of struggled to get up higher. But then today, of course, we got follow through everywhere and that pushed everything higher, and so it didn't matter. And then finally, the last question along the same lines here really had to do with this reversal again. Was this setting up an ABCD structure to the downside, or is it doing that? Or can we tell? When you look at these, I'm just going to use the XLI because I happen to have it up here. When you look at these, you have this push up, right? It ends up being an ABCD structure, to the top side. And then, excuse me, to the bottom side. So you push down, right? You more than complete this ABCD structure. And then you get another bounce, right? And that bounce, when it actually completes, and it more than completes again, you've more than completed one more time. So if you're going to complete another one, then you're going to have to actually kill this thing about right here. You're not going to be able to let it get much higher, because if it gets much higher, the probabilities of it coming down are lower. And even if it does, it's not going to extend very far. So let's just say this thing gets up to this area and then comes down again. Well, the extension is almost nothing because the A to the B and back to the C, there's not much room there. And so it's kind of like, what does it matter? So if it's going to be an A, B, C, D down again, then you would expect you're going to see it right away. And you would expect it's going to happen probably tomorrow, head back down that way, and continue to follow through on Friday. If we look at it from a different perspective and ask ourselves, okay, is this an ABCD structure to the downside? Some of the other things we can use is neoclassical tells, like, can we get back over the bearish retest regenerate? In this case, if we do, that would be up into this price zone, right? Getting over this swing point lows high. And that would tell you that, in fact, the downtrend is really probably a sideways trend, and that would kind of answer that question. So, if you get back up to here, that says it's probably more like sideways instead of down. So, that's another thing you can use in your arsenal to try to figure this out. So as we come back here and turn our attention back around to the markets, the one thing that we did see today was this well orchestrated Fed rollout of the first rate hike. I mean, they've advertised this so much and so well that you got almost no reaction here in the US dollar. Didn't go skyrocketing higher, which is what the Fed does not want to happen. And it also didn't fall, it just kind of went sideways. And to me, this dollar is probably in some sort of a large range trade, in this area as the top, in the area up underneath it as the bottom. It's just sitting there range trading. And as long as this thing can keep going sideways in this range, whether it's in this top half or this bottom half, the market's going to probably do okay. I mean, that's not going to be the demise of the market. So the Fed got exactly what it wanted in the exchange rate side. The thing the Fed can't do anything about is the oversupply in the oil market. Oil makes new lows, and if oil starts to plunge again, then that's going to put more pressure on these markets. And speaking of making new lows, if I look at the OIL, there it actually did make new lows. I didn't watch the West Texas Intermediate futures today, but I think they also made new lows today. On the bond side, bonds just, they gyrated quite a bit, but ended up nowhere. And that's pretty much the story across the board here. So we didn't really have any kind of big pickup in anything that would be concerning. The high yield corporate market looked pretty good. If you look at the junk bonds, they're coming back to the breakdown bar here. Got a nice bounce. Yeah, these things can come back down some, and they're not going to, they're not going to skyrocket back up to the moon. But the way markets work is the shock factor, right? When you get a break like this and you get the plunge, that gets people attention. But then once you've done the plunge, unless you plunge again, it doesn't matter. I mean, it's not a big deal anymore. Everybody's already used to it. And so, like I say with the oil market, if the oil market doesn't plunge, then, it's range trading, and the market can deal with the range, even if that range is much lower than they'd like to see. Over in the gold market, you got a nice big bounce out of it. I don't know how far this can carry. We'll see if it can get over the swing point high. That's the next test for it. And finally, if we wrap it up looking at the continuous commodity index, there we also made new lows on the week. So overall, if I look at this, if I think about quadruple witching on Friday, all those bearish bets are in trouble. And what I mean by that is anyone that has a bearish bet on, they're not going to be able to take that off at a profit. And so now it becomes a question of trying to get something out of it. And so what we may very well see tomorrow and Friday is that options expiration playing out, and this move straight back up, right? This V move, if you will, back up towards the highs may in fact drive right back up to those highs as a result of those options expirations taking place tomorrow and then again on Friday. So, right now to me, it looks like this market once more has the V-shaped move going on and is going to be able to get back up there and test those highs one more time. That's it for tonight. Thanks for joining me. As always, tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night, and I'll see you next time.